Yeah, let me know what you would want to change. What would you want to change about this? Right? I'm going to post this into the chat so you can read it over. Let me know what you would want to change. There's the full thing. It just took up the entire screen. But let me know what you got, what you would want to change from that. And while you go ahead and assess that and let me know what you want to do, here is that option strategy. Just about done back testing. Very nice. Look at this. It's up from 100K to 189K within the course of about a year or so, a little bit longer than a year. So that's a pretty damn nice return there. 53% annual return. The annual return dropped pretty significantly from the last one. Why did that happen? I don't like that. Something went wrong. Still not bad. I mean, mind you, 53% annual return is still pretty damn good. But there seems to be something different. Something has changed. So let's see here. So it bought. So here's our backtesting chart. So it bought symbol WDC and then sold WDC and then it bought app. So it would have bought app on the 24th. How did app 11 do? App. Google Finance. App 11 over the past 5 days. I really don't like this. Let's go to finance. Google Finance. This is my favorite. Finance.google.com and type in app. I bought app about a week ago and it's up. So that would have actually been a good choice. That would have been a good choice. I would have bought that on the 25th of September. So I would have bought it, yeah, right before this big updraft. That would have been a very good choice, Mr. AI. I would have bought it right here. That was a very nice run up since then. Okay, so it's making good choices there. For that, I would have bought WDC, whatever that is. Robinhood, I would have bought earlier in the month. So this actually looks like it's doing pretty well here. Maybe what the problem is the position sizing. It's because it seems to be buying smaller positions now. I think before we had it buying bigger positions, and now we're seeing it buy smaller positions because we're seeing both the max drawdown and the annual return reduced. So I think the AI might have made this take on smaller trades, which I do not like. I don't want that change. So I'm going to go back to our AI editor and let's take a look at this. So this is version 4, and version 4, you could actually look into the code. Allocation percent, 7%. Min days to expiry 14, max days to expiry 28, has a take profit of 100%, a stop loss of 50%, max simultaneous, maximum of different underlying symbols to hold at once, 1 or 2, and force. Oh, so that's something that changed actually. The by weekday 3 is Thursday. Okay. Whereas before, in the previous version 3, I think it was buying more than one symbol at a time. That's actually something that I didn't know. Yeah, because stop loss and take profit are the same. Well, actually, max simultaneous is still 1. This was still the same. But what gives? Why did it all of a sudden drop? Okay, so let's talk to the AI about this. We'll say, okay, these changes are good, but all of a sudden our back test is not doing as well. Can we figure out how we get this back test up more? What we changed from one strategy to the next, you're saying you changed all these things. I don't understand how this would affect our return so much. We had a 300% return per year before. Now it's down to 50%, which is still pretty good, but not 300%. So why did it drop so much, right? And maybe I'm thinking our allocation percentage should be higher. Maybe we should trade 15%, right? And maybe we should trade 2 symbols at a time. Maybe that would actually be a better thing to do. At least that way we're diversifying between 2 symbols, get the top 2 symbols, own those, and do a 15% allocation between those 2. I'm starting to think that that would probably make more sense. Anyways, and then also just generally, why did we lose so much cash? Why did it not perform as well as it did before? That I'd like you also to analyze, please. And then I think the minimum days to expiry, I think should not be 14 days. I think it should be minimum days should be 21 and maximum days could be a little bit more than 21. We can make this go up to like 2 months, right? So anywhere from 3 weeks up until 2 months expiry, any of that is fair game to purchase. So I think we can do that as well. Or actually, no, I take that back. 14 days is 3 weeks. We want to do 3 weeks. Yeah, actually, you know what? No, let's do that. Let's do 3 weeks out, 15% allocation. So we're now buying more of a percentage of the account, but we're buying not just one symbol at a time. I actually really like that. After I've been watching this trade for a bit, that's something that I really like. I would want us to buy more than one symbol at a time because then we diversify. We have a higher chance of hitting at least one of them for the week, and then buying a bigger percentage of the account, which will definitely up the risk, right? And maybe I've actually even spoken to some other people about this. We can have like another risk thing in order where, like, if the VIX is too high, we can make it just not trade. So, for example, that would have been at the beginning of the year, January to March, we had this big correction. Somewhere around there, January to April, we had a big correction somewhere in there. If we had a VIX check that if the VIX spiked too much, that we just exit everything, I think that would actually work out pretty well too. After watching this thing trade for a week, that's kind of my thought process. So let's take a look and I'll show you guys why I think that. So if you look at the VIX, for those of you that don't know what the VIX is the volatility index. It is you're using a calculation on options to figure out what is the volatility of the stock market, right? So how risky do people generally think the stock market is, right? You can look at it kind of like what is the insurance that people are willing to pay for buying put options, right? It's kind of what the VIX is, right? So it's an insurance premium. People think about it that way. So when the VIX goes up a lot, we tend to say that the market thinks that things are more risky, right? So let's go back over the past year, and you can very clearly see here, when do you guys think the market was more risky? Right? It's a very big spike in the VIX here.
Okay, like what you saw? See the strategies we've created in the marketplace, or create your own with our powerful trading AI at www.botspot.trade.